Good afternoon. This is Peter Mullen. I am going to get us started now, a couple minutes after the hour. Thank you for joining me today. Tell you very briefly what we're about. I am from American Consumer Credit Counseling. We are a nonprofit in the Boston area, and we have been in business for over 30 years, helping folks basically with lots of financial related questions and challenges. We provide free financial literacy. We also provide counseling, and then we also have a service which, for those who are in deep credit card debt, we have a way to assist them with what's called debt management planning. So we also offer this seminar, 2 webinars every month. Today's session is about the very large topic of house buying and the process, really focusing on the financial perspective. So I've divided up the whole, what I call the whole journey, into 12 steps. And I'm going to cover the essential ones that I think hopefully are the ones that you're looking for. It will bring us through the various types of things that are really needed in getting you ready to buy a house. I mean, we're in the, people located all around the country. We have 11 states that registered for this today, but in the area that we're in, buying a house is no easy matter in terms of the cost. So wherever you might be, that's a challenge. We'll talk about that. What we have to do to get ready, the savings, budget, and credit that we need, decisions that we make through this process. We will talk about that. We'll talk about some of the mechanics. I call that simply the debt to income ratios and other numbers that really are important to know. The whole idea of pre-qualification versus pre-approval. It's the process by which you go through in this journey to get you to the final, mortgage that you need. And then the whole idea of selecting a real estate agent. They're one of the key folks in this whole journey who will really guide you. So really that's an important process for you to do. So let me get started with this, like I said, and then I'll break it open for questions that I would love to hear from you. Okay, the foundation. This is the starting point of everything, right? You build from the house from the bottom up. And for us in dealing with housing, some of the very important things you probably know of most, but everything is really important here. You also obviously have to have money. So we're going to talk about really what's needed to kind of get that ready and how you get ready for that. Credit follows right behind that because having good credit scores and good credit situation is critical. Planning never stops here. It's a whole process by which we have to kind of plan ahead. You work with many folks to make this happen. This is not a single person item. This is, like I often say, it takes a village, as they say, to get ready for a house here, to live in the village. Time, the whole process of preparing, thinking, doing, takes usually a number of months. It's not a fast process because of all the things that are involved legally and from a registration point of view. And then, of course, many numbers along the way. So I want to start off by giving an overview of really the whole process on a high level, and then we're going to drill down into the topics that I heard people bring up, and I'm going to just say what they are. From the people that registered, savings was one of the biggest ones. That was followed by helping to find a house, and what do you do? Well, I'm going to cover both of those, and I would, again, love to have your questions or thoughts as we go through this. So let me start out with the overview. I always like to think of kind of the big picture first, and then we will drill down into what is necessary to get a house. What this shows you here is that there are at least, various ways to cut this. That buying a house is a lengthy process of which, the exact number of steps isn't like it's well defined, but I can tell you these are the general steps I've seen. I was a first-time home buying counselor in my previous life before I joined American Consumer Credit Counseling, so I do know what it's like to work with all the various folks along this journey to work to do these events. And so what I have listed under each one of these steps that you see here is items in black type. So what that indicates is the financial thoughts, the financial elements that you generally have to deal with under each step. And so if we're going to talk today, for instance, primarily on the beginning part of the saving, the repair, the qualification, the realtor, some of the first steps we're going to talk about, you can see that each one of them could even get more extensive. Obviously, we have to limit our time. So overall, here's the process. and I'm going to then open it up for your initial questions, and we'll get started. Saving money is first. Everyone asked about that. There's no question that saving money is the first part. I would say, obviously, save as much as you can. There's many ways to do that. I would suggest people find ways to do it automatically. That's generally the best way to get that going. Saving money is followed very closely, and maybe at the same time, you should do repairing your credit, knowing what it is, knowing what the numbers are. As you'll see a little bit later, every mortgage that's out there often has their lower limits as to when they won't even start the process with buyers unless they begin to see a certain number or higher. I can't give you one number. I'll just say that it depends on the mortgage that you're seeking is really which does that. As you get to step 3, you try to get pre-qualified. That's a process by which you have an informal type of qualification to get your house. Later on, you'll see at step 9, you get actually qualified for a mortgage, but this is the pre-state. I've given you a general. Then from there, you're able to then work with a realtor because you know what money you might have available from what you're going to borrow versus what your down payment is. Then we have the next part of finding a home. And I'll note that for the folks who registered again, that was a second concern. How do you find a home? How do you do that? I will say in a word, it's your realtor, step 4. They are the ones who are the most knowledgeable. And as a buyer, if you're in the buying mode, a realtor, at least here in Massachusetts, is free from the buying perspective because they work only when the house is actually, you buy the house, the seller pays simply for the commission. You as a buyer do not. Eventually you make an offer on step 6. You hopefully have inspection done, and I'm a big advocate that says that's never compromised. You should never not do an inspection. This is a big protection for you. Documents come out like the purchase and sales. This is the main negotiation document that lists everything in writing, and it has to be in writing for a house. You apply for a mortgage. Again, that's when you actually seek the money that you need. Again, you need insurance. And after you have 1 through 10 done, you eventually can set a date to have a closing. You actually do close. All the money and papers are swapped. And finally, on step 12, some 3 months, 4 months from when you started, you're able to move in. That's the opening. So I want to start out right now, Maddie, if you would. Let's ask folks right now. If anyone has any questions or comments from the very get-go, would you please put them in as a question, and I'll ask Maddie to pass that over to me. So any questions that people have, please send them over. Okay? In the meantime, waiting for any questions to come through, I will just relate some of the comments that were made in the registration process. So I'll give you what a lot of people said in terms of what they were looking for in today's webinar. I have people, like I said, from 11 states: California, Arizona, Massachusetts. I have Minnesota, New Mexico, Oregon, Pennsylvania, South Carolina, Virginia, all different prices and situations. But what people ask for the most is, how do you save? The saving for a down payment is really the biggest part, getting that done. That was followed by, how do you find a house? What's the process? How do we start? A lot of people ask that. Then the next thing I'm seeing here was kind of a lot of one-offs. Costs. There's nothing that I can do about costs other than simply suggest there are some things, at least again, that in general lower your costs. People are concerned about debt. I will briefly talk about that too, because credit, when it's used, leads you into debt, and managing that is a challenge. And then finally, the credit score and down payment, that's going to come here at the beginning. So I don't see any questions. Maddie, there's none coming through?
Nope, no questions.
Okay, so I keep that open for now and let you think about some questions that might come through. So let's go on to our next part. The home buying process overview. Again, just giving you kind of the starting point. It's going to start today with our foundation. And we're going to talk about a number of foundational things that are really critical to do to get the whole thing started. And yes, we do build from the ground up. So foundation is followed by your housing choices. How do you make decisions? What are some of the things you deal with? And again, I just reiterate, the realtor is really the one who helps you on that front. And then all along this process, we will focus a lot on protections. because since this is a very important legal and huge purchase on your part, it's really critical that you do pay attention to the protection part for you, which includes such things as the lawyers that you're working with, how the deed and the mortgage is written, how the purchase and sales is written, the inspection of the house to make sure that you're buying a house that's of value. There's many things that go into this, so I hope that you will ask questions if those are your concerns. But in the meantime, I will then go deeper on these, and I look forward to your questions if you have them. So, building a solid foundation. Starts at the very beginning, step one, with the savings. You have to have a lot of money to make this work. I mean, that is pretty obvious. But as you saw from the very first slide on the 12 steps, almost every step, not every, but almost every one of the 12 steps has some form of money movement of some form. Once you get to the offer is kind of where things really begin to flow. At that point, and that's number 6, step 6, that you begin to say, okay, I really want to commit myself to this. And so now you're on a journey that you really have to pay attention to time and money, because at that point, once you've committed, there is a whole process by which this works. One of the keys for you to save, for those that asked about that and were concerned about it, there is no other way but for you to have a really good budget. Put very simply, you've got to know what you make and what you spend, and then how much money you can allocate toward this house you want to buy. This isn't just me. When any of you start that process of getting pre-qualified or talking to any mortgage company, they're going to grill you on this, because the whole point of it is to find out truly what can you afford. No lender wants to lend anybody money that they don't think they can get back, right? That's number one. And get back on time, number 2, and get paid interest over time. That's number 3. So you're going to have to make payments, and they're going to judge and see if you are able to afford it. A budget is what helps us know that. Following that, the financial profile is your credit profile. Obviously, the higher your scores, in other words, something in the 700s or greater, more than likely. There are obviously some credit, some mortgages you can get and loans you can get if you're in the 600s. But as you get further down towards 600 or 500s, there's less choices. As you have a higher score, there's more choices and less interest. And then borrowing, we go through a process by which you kind of informally can get a pre-qualification. That's when you might talk verbally to somebody at a bank or a credit union or a mortgage, and you get some sense as to where do you stand. But then that's not official. It's just, there's nothing is official in the home buying process unless it's written on paper. So that's another takeaway here. Everything's got to be in writing. Everything verbal doesn't mean a thing. Nothing. So everything has to be in writing. And usually there's a process by which they give you so many days, and they're going to tell you. Okay. I'm going to still continue to open it up for questions. I figured if there's only 2 folks on right now, we can almost deal with a one-on-one basis here. So if you have some questions, please put them through. I would love to address what you are concerned about. So let's go on with with this whole idea of savings. The way that savings is really a key part of this is that savings is what allows you to hopefully make a larger down payment. The size of your down payment makes a big difference on many other things. So can you get away with a low down payment, meaning 2 to 3% of your cost? The answer is, it depends on what part of the country and what mortgage you're going for, but the answer is yes. In this example here, I was showing the cost of a $300,000 house. In that example, you can get into that house at a 3% down payment of $9,000. So again, according to what part of the country and what your costs are, that might be your entry fee to get in. Interest rates have now since gone up. Since I wrote this a few months ago, 3% was not uncommon. Now 5%, unfortunately, they're going in the higher direction now. One of the important things you got to think about as you are starting to go down this journey is kind of play out the numbers. The great thing is that there's a lot of calculators online. One I might suggest is called Bankrate, and there's many others. which you can play with the numbers, put in your sample numbers, put in your what you could do for a down payment, and then play the what if game. What if my taxes were this amount? What if I was able to put down 3%? You know, what if I had this amount of money and this was the interest rate? You can then figure out what your P&I, your principal and interest, will cost you. Other things like taxes, insurance are estimates. If you are putting down less than 20%, then folks might be familiar with what's called PMI, private mortgage insurance. Some places have other names for it, but simply what that means, if you're borrowing an amount that's less, you know, if you're borrowing an amount that in which you are trying to borrow, let's just say 97%, anywhere between 80 to 97% of the cost of the house, the lender wants to be covered in case you can't pay it. So your private mortgage insurance covers them in the event that you default on your mortgage. It's an extra cost for you. If you're able to put 20% down or greater, then your principal and interest will be smaller because you're borrowing less. But your PMI, your private mortgage insurance, will be zero. So like a lot of things in life, you got to make choices. Time and money are often going together. And, you know, you got to decide what's right for you, what you can afford, what your budget will allow, what you can have for a down payment. I say to most folks, you got to really think it through, and you got to do the best you can. But if you're not ready with these numbers, I suggest that you wait. Waiting is so that you can build up your credit and your savings. Nobody knows where the house prices are going to go. They do go up and down. But we do know that the amount of savings you have is something hopefully you can control and increase. All right, let's talk a little bit of what's called the front end and back end ratio. This is an important measure in this whole process. I'm not going to cover them in great depth, just other than to say these are ratios by which most houses are rated. And this is how a mortgage bank, a mortgage lender, a bank, a credit union decides if you can afford. And you can play out these numbers yourself. What you do is you ask yourself, you know, when you look at your full amount of money that you have, all these things go into what's called housing, your housing cost. So if you're pretending that you want to buy this house that you really have your eye on, you can begin to project out what your mortgage costs will be, principal and interest, taxes, house insurance, PMI if you're less than 20%, and HOA fees if you're buying a condo. That's why this is not one size fits all. It really depends on your situation. But in the end, that full amount of debt you're carrying should be no more than 28% of your overall money that you have, which is called your gross income, which is kind of funny in this world. It's your gross income, not your net. So to give a quick example, and I will have some, if you're making $60,000 a year gross, your gross amount per month is $5,000. You can start to do the math and say, do these amounts count for 28% of that $5,000 or less? That's a conventional mortgage. Government, 32%. They allow more. Again, please ask questions if this isn't clear. On the back end side, this is what we do, this is how a ratio, we're still talking about ratios and how you're qualified or not. A mortgage bank or a credit union will look at your back end debts, all other debts beyond housing, and add that in the same process. They're going to compare it against your overall gross income and say, can you handle all of these front end debts, back end debts together? And collectively, they should not be more than 36% or 43% in the case of government. Again, here in Massachusetts, we have certain lenders called Mass Housing Partnership. In your own state, I'm sure you have your own public-private lenders that you might have as well. Love to answer questions if you have any. So I'm keeping that open. All right, Continuing on with this debt to income, just to reiterate so it's clearer in case there's any questions on it, I'm giving you an example here of what the housing costs might look like. Again, on the front end side, we're looking at just what would a house cost us. So this is the numbers we're looking at. The front end in this particular example I'm giving you is $1,751. The back end is what are all these other debts I have to consider for this infamous ratio. Well, credit cards, cars, medical, that would all be added, and I'm pretending that's 500. Let's see how that plays out in an example then. So your ability to see if you pass the debt to income ratio line or not is you put those together, 1751 over my 5,000. Again, I'm pretending I'm making 60,000 a year. That's 5,000 a month. You take that front end and put it over, that comes out with 35%. So far, so good. Back end ratio adds all the other debts on top. And again, that should not exceed 45%. It depends on the mortgage you're getting. But you can see very quickly, it's kind of hard to make it. Even with 60,000 in income, you may want to hopefully have others income added in and see if there's any way that you can get rid of some of your debt. That will make your DTI smaller. And that's what I want to cover next. What can you do if your savings and your credit, are good, but they're not good enough? What else can we do to increase our income? I'd like to suggest, and this is what makes me bullish about this whole discipline, is that there's many ways, not always fun, but there are many ways to add to the income part of the DTI. Can you do any other small things? There's a gig economy. Are there things you can do on a part-time basis? Are there things that other members of your family can do? Be creative. What can we do to add to the income side? That's one way. And what can we do to decrease expenses on the side that affects the back-end ratio? Can we somehow lower our debts? Can we refinance if it makes sense? Can we have some of our student loans delayed or have forbearance to put them set aside? Are there ways to reduce our credit card debt? Eat more at home, don't eat out as much. Find ways to change some of our habits. I have some folks who I counsel and deal with who unfortunately, again, I don't know if this is true of folks on the line, that they often spend an awful lot of money and they can't stop it. Well, you got to find a way to put that on hold while you're trying to buy a house. It's going to suck all the oxygen out of your account. It's one way to think about it. But here's the good way to think about it. You're putting all this aside for a really important purchase that you're trying to do here. Your house is a very important thing, but I would still say only do it when you're ready financially and you're ready for all the responsibilities that a house brings. I would never advocate as a financial counselor or coach for someone to get in a house before they're ready, both economically and responsibility-wise, because houses are like having a baby. They demand a lot, and you've got to always the care and feeding of a house never ends. Any questions, comments anyone wants to bring? Again, I open it up. Anyone can write in the questions. There's only a couple folks on. I'm glad to address anything that's your concerns.
Does anyone have any questions?
Okay, I'll move on then. I'll cover some more important things here. Thank you, Maddie. Pre-qualification versus pre-approval. I already mentioned this. Go just a little bit deeper here to say when you first go through pre-qualification, this is the case where you often just talk informally with your local bank, credit union, or mortgage lender, and you just say, look, just on the back of an envelope, how do I look? This is kind of my situation. What do you think? How much do you think I could borrow? And here the gentleman is saying, well, we think based on what you said, you could get $275. Well, that's at least a starting point for us. As you get deeper, there's what's called a pre-approval. Now that's later on, and that costs money. Pre-qualification is free, at least where we are. And when you actually make the move to do pre-approval, you're looking for a deeper credit check. You're looking for a deeper analysis of everything you spend, all your debt, all your past taxes, all your check stubs, everything about you over the last 2 years is counted and determined if you can make it or not. Because think of the big picture here. You want to be successful, and the lender wants you to be successful. They don't want to be in the home ownership business. They want to be able to sell you a mortgage that you can afford and pay them back regular payments on time every month for the next 30 years. That's the calculation they're trying to do. All right, a key person I've mentioned a couple times in this whole equation. I think they're one of the most important ones, and I think that this person addresses a lot of the questions I initially saw from those who registered. How do I find a house? How do I find a good house? How do I find, how do I get through this maze of all this stuff? Well, I would say you carefully want to select your, what they call either real estate broker or agent, and that the only difference there is according to whether they own their business or they just are a member of a business. Any one of these folks can help you, and they are good to get you through the whole process. I would say go with someone you trust. Trust is the key word here. Not someone you just met or someone you know from school or even one of your relatives, one of your nephews or something. It's someone who you really know, who knows the business and you can trust. They have such a key part in this whole journey from step 1 through step 12. It's they who really know the whole name of the game, who to meet, how to meet, when to meet, what to do, questions to ask. And you really want to go with them and trust them. And if you don't like them at the beginning, find another one. You are the CEO of your house. You should hire and fire the real estate broker or agent as soon as you meet them. If you like them, go with them. If you don't like them, move on. There usually is no cost for a buying agent because they are helping you buy a house. The seller, again, based at least from where we are, comes out of the seller is the one who pays for the commission, and the realtor on the buying side only gets the commission if the house is bought by you. So they could do months and months and months of work with you and get nothing. That is possible. Tough job. All right, housing choices. You do need the team. I think you often start with your real estate agent, but then again, they quickly often point you towards the other parties you need. A lender, a lawyer, an inspector, an insurance agent, maybe even town hall to find out the details of where your house has been, what work has been done on it. Is there a lot of crime in this area? What's the schools like in this area? What is this in a flooding zone? I mean, all these things need to be found out. Many people will help you answer these questions. Location and comps. It's the realtor that allows you to learn about what your house is that you're looking for. They will try to go within the price range you're able to afford and then find you places that fit that. So they do the best they can. And, it's their job to find out what they call as the comp. So if you're looking for a 3-bedroom house, 1 bath, so many square feet, 2 stories, whatever it might be that you're looking for, they do the best they can to find that within your price range. I know that that's not an easy job nowadays because there's often not enough inventory. There's so much competition for houses. I know, again, around here, there's so much competition, people are often paying over the asking price. And so they're paying lots of money over that. Here's one thing I would suggest, though. I know this is true from my experience. Generally speaking, one of the ways that you can often find a cheaper house is if you allow yourself to buy an older house. That's a generality, but it's generally true certainly around here, because an older house is typically one that's not as perfect. It's not always square. Now, I do a lot of building on the side. It's one of my little hobbies on the side. I've helped build houses for 40 years now, and they might be out of square. You might have a slight you put a marble on the floor and it starts to roll because it's not as level as it could be. Doors may not shut as perfectly, but at the same time, this might be the way you start. An older, smaller house might be one way to do it. A brand new house tends to be cleaner, straighter, not necessarily out of these issues. They do make new housing wrong. That does happen. It's not impossible for builders to make a house today and forget to do things. They put them out like cookie cutters. So just having it new doesn't mean that it's perfect. Still could have issues. That's where inspections are going to come in, by the way. But anyways, this is kind of some of the starting point when people say, well, I want house choices, or how do I begin? It's really back to your realtor, real estate agent. They are the ones who often push you and show you all around and then help link you up. And here's one other tip I would say to folks. Don't ever have a real estate agent or anybody provide you with just one name. That's not a good sign. Anybody advocating for other people should say, I know 3 or 4 lenders, here's their names. I know 5 or 6 lawyers, here's their names. I know 3 or 4 inspectors, here's their names. Because you want to be the one that looks them over and chooses. If they're directing you to one person, that might be a sign that they're leading you to somebody. Again, it may be a shady deal. They're leading you to somebody who, in fact, is a friend and not necessarily super competent. All right, I wanted to just show a comparison here since I know we have people from all around the country, but I thought this was a stark choice here. Bowling Green, Kentucky, 122 per square feet versus where I live. In Boston, Mass, the average price was $760 per square foot, and this was about a few months ago. I'm sure it's higher. So I was trying to make the point that obviously location is the key thing here, and that where you live, the square footage and the amount per square foot is what's going to govern the overall price. If you happen to be a place like us or in New York or in the West Coast, you'll pay a lot per square foot. And in other areas in the mid part of the country or in other more rural places, you'll pay a lot less per square foot. These are the realities of real estate. Okay, moving on. Let's get into some of our movement of money now. The movement of money really starts when you make an offer. This is when you've gone through the initial check of housing. You are going through to say to a seller, I like this house, and we are so serious about wanting to buy this house that we're going to have $1,000 to hold it. Now, of course, once you do this, you got to start playing the time game and the money game. You got to pay attention. Once you put $1,000 down, that's serious enough for us to want to do the right thing. Because if we don't play by the rules now, you could lose your $1,000, and nobody generally wants to lose $1,000 for nothing. So if you do play by the rules, you will get your $1,000 back. But this is why language is important. So here's an example. You might say, I will get you $1,000 to hold this, but my offer is contingent, and the word contingent is a big word in the real estate market, means it's depending on a satisfactory inspection. So that gives you the right to say, if in fact there were a bad roof, bad windows, there's termites in the wall, you can turn around and say, well, it's not satisfactory, I want my money back, and you'll get it back. So that's how you don't lose your money. The seller now has to respond. Once you make an offer, generally, again, this is the rules that I'm aware of. It may differ in some parts of the country, but the seller has to respond within their time frame. 24 to 48 hours, yes, we accept that offer and what you're trying to do for us. Again, the $1,000 is the hold, that's not the offer. The offer is some amount related to what the seller is asking, generally over what they're asking. And then they can either say yes, no, or they can try to negotiate. Then it goes back to the buyer. If they accept it, now the buyer has the right, and I would say the duty, I would go that far, to get an inspection done. Because really, you're buying a huge commitment. I know that, again, a lot of what I see and hear all the time is people waiving the inspection. That's your choice. It's never, as a financial counselor, I can never tell you what to do. I can only suggest that if you do that, you are taking a huge risk. It's your choice. Let's talk about the application for a mortgage now. The mortgage application is when you've moved from the initial pre-qualification. Now you're looking for pre-approval, and you're looking for approval of getting, really putting your money on the line to get the loan. You've got to go through a process of putting your whole financial life in front of the lender that you're going to. They're going to ask you about these 4 C's. These are a typical formula in addition to the debt to income ratio. Here's another one. Capacity. Can you pay back the mortgage? Well, your budget is going to tell us this. How much do you make? How much do you spend? What are you dealing with? They're going to be able to come back and make an estimate there. Capital. Do you have sufficient funds in the bank? Do you have sufficient liquidity? Do you have sufficient assets somehow, somewhere that we could draw upon beyond what you make every month? Credit. Will the borrower repay the loan? So they're going to look at your history. Your credit report is an indicator of what you've been doing the last up to 7 years worth of your history on payment of other loans. Do you pay back your credit cards, your student loans, your car loans? That history gives them an indicator of what you will do in the future. If you've paid all along, then the chances are you are going to pay in the future. If your budget says you can afford it, and you will get a credit rating that indicates you're probably in the 700s because you are a payer and a paybacker. You pay back. On the other hand, if you have a 600 or 500 something, chances are you have a history that's a little bit more sketchy, maybe not as complete, and they're not sure if they should lend you the money or not. Collateral, they're going to look at the market value of your house and see if it's worth it to lend you that money, and if it is, they want that market value to be definitely above the loan, if not, 10 or 20% above the loan. In the event that you default, they can sell it. They're going to look at everything about you, and that's what's going to, again, help you to know whether you can get that mortgage or not. All right, let's start with the protections. And again, some of this might differ from the state that you're in, but for the most part, fair housing laws govern everything from a federal level, and they govern what can or can't be asked of you. And so therefore, this helps keep us protected against discrimination. And so many past laws that were really, really bad in terms of typically for folks of color, there were a lot of discrimination and redlining and other things where people were discriminated against have been changed by the fair housing laws. Came out in the 60s. But other states, like my state, Massachusetts, have added even extras on. There's more in Massachusetts than there are in other states. Everything is in writing. Nothing that's verbal counts. Everything has to be in writing for what you take with the house, for what you get fixed on the house, for anything that you want to have done or you and the seller agree to, has to be in writing, and it goes into the purchase and sales agreement. That's why that's such an important protection for you. A lawyer has to know it and then put it in writing, and everyone has to sign off and agree to it. That's the way the process works. The best way that you can protect yourself too is your lawyer helps you to do this, and your realtor. They help to have what I call backdoor contingencies all the time. Because since you're putting up an offer of $1,000, that's to hold it, and eventually you're gonna have to do a down payment. That could be multi thousands of dollars. $20,000, $30,000, $40,000, $50,000, $60,000. You want to get out of the agreement if you need to. So it has to be written correctly, typically upon a satisfactory inspection or other kinds of things you put into the purchase and sales. Like I said before, once you start on this journey, you get to the offer, time and money are very critical. You've got to pay attention to the time frames involved. If it says you have 48 hours to have an inspection, you have 48 hours. You can't go on a mental break and go on vacation right now. If you don't pay attention to the date, you could end up losing your money or paying extra money. You don't want to do that. When you get a mortgage, the way that it works, again, is that you don't have to get your own real estate lawyer, but you can use the mortgage company or the bank's lawyer for you. The common practice is that part of your payment of that lawyer on behalf of the mortgage lender, you can use them as well. But for anyone who has a complexity in terms of, your family situation, maybe some kind of estate issue or other complications, you may want to seek your own lawyer in addition to the bank's lawyer. That's your choice. There's no mandate that says you have to have one. but you will pay extra. And again, the prices are going to vary in parts of the country. I can't emphasize enough number 6 here. This is a choice, again, one of those things that some people go down path A and some go down path B. All I can say is that, you know, as a former first-time home buying counselor and manager and so on, and having seen so much of this up close and personal, that a housing inspector is very critical to help you know that you've got a quality house. As a builder on the side, I know of all the things that can go wrong. And you could very well have your house, and I don't know if you've all seen that movie, I think it's called The Money Pit from way, way back. Tom Hanks was but a young person at that time. But it shows the story of how he and his wife bought a house that ended up costing them thousands and thousands of dollars or more because they never had it inspected, and it largely fell apart. So you don't want to, in addition to everything else you're paying now for the mortgage, have a bunch of construction costs on top of it. So in as much as your emotion might say you love the house, you got to use your head as well. An inspector's job, and we'll talk more about it, is to help you to know if this house is worth your money or not. And then the final walkthrough is another protection. We'll cover that at the very, very end. But then this is, again, how you know up front that something that the house really has no secrets. You should know it and go into it fully with your eyes open. That's all I advocate for. You can buy a house that has, you know, rot in the floors and rot in the windows and has a leaky roof, but as long as you know it and you're paying for the house knowing that, I don't have a problem with that. It's when people buy a house that they don't know what's wrong with it, then they find out after the fact. I think that is a rotten deal. And the only way you can find that is through the home inspection. The home inspection is you pay a separate professional. Again, the realtor can advise you of some. I would be very careful in picking one. I would also find maybe a friend or a good friend or a relative or someone who knows the business. Bring them along with you when the house inspection is being done. There's nothing wrong with that. You can bring your own local carpenter who you know. Pay him money, or maybe he'll do it on just a good deed process. But the bottom line is this is your payment. It does cost you money out of your own pocket, but I think it's money well invested, because you're getting the true picture, objective picture of your house. Their job is not to tell you ultimately whether to buy the house or not. It's their job to tell you just the way it is, good, bad, or ugly. So people will often do this. Hey, what do you think? Should I do this? Should I buy the house? How much does it cost to replace these windows? That's really not their job to do that, nor should they be telling you as the inspector, oh, I have a brother-in-law who can fix this roof for you or fix this window for you. That's getting kind of sketchy when they do that. They should not be doing that. Their job is to give you a detailed report of everything that's good, everything that's bad. And you, with your realtor and your lawyer, decide on whether you want to go ahead with the house and negotiate or not. So a well-done inspection is your ability to, number one, get your money back. If you don't want the house now, you should get everything back. Your offer, your down payment, it's all returnable to you. You're not going to get your inspection costs back, but you should get all your other monies back, no questions asked, because your house inspection was not acceptable. You could, it depends on the market, depends on the seller, use the report to say, look, these things need to be fixed. There's clearly $20,000 worth of repairs that are needed on the roof. They might be able to do things like bring the price down or split it in half. Those are common things. We'll give you $10,000 off. You got to work with them. And then if it's a hot seller's market, then they may not even lower the price at all. If there's so much demand, they may say either you take it as is or whatever, but at least you know what's wrong with it when you go into it. Okay? I would love any questions if anyone has any at this point about inspections. Let's cover a few more and open it up for any questions again. I mean, I'm still opening it up. But anyways, so your decisions now, the ball's been thrown back to you in your court. You got to decide, do I buy it as is and fix it myself? Hire someone to do this stuff? leave it. So this is just an example of the kinds of things you got to decide, right? Because now if you're a homeowner, you own everything. There's no more landlord or maintenance staff to fix it. Water, walls, roofs, tiling, insulation, painting, leaks. You own everything. You own the whole kit and caboodle, and you've got to take care of it. It's an asset that has value, and houses get old, and they need regular care and feeding and maintenance. And the good thing is that a lot of the maintenance part of houses is not generally too expensive, but there are some things that are very expensive. So let's go to the next page. A home inspection should tell you, amongst other things, the age of some of these key systems and machines in your house. And you need to get to know, not that you need to memorize this, but the inspector will advise you and say things like, the roof in this house is, in fact, 35 years old. And so you can expect that the roof will need to be replaced very soon. So the next question you should have is, well, what does it cost to replace it? And then you get an estimate and start to see it's 20 to 25 to 30 to 40,000, depending on where you live. In today's world, the whole supply chain of things has made prices go up even more. And look at these other systems, central air, furnace. They all have a certain lifespan. By knowing the age of it, you can estimate, nothing's for sure, but you can estimate what its life is and if you will have to replace this in the near future or not. Your decision should be based on these as well, not just the house as is, but what is going to need repair in the next 1 or 2 or 3 years. If you can't afford that projection, then this probably is not the house for you. So you're forewarned by your inspector that some of these things are non-negotiable. Like some you can live with. I assume you can live without a trash compactor. You can probably live without a freezer, maybe, downstairs in the basement. But you probably can't live without, a furnace and a gas fireplace or a boiler or certain types of things about your water heater and so on. Those are non-negotiable, I think, in most houses. All right, let's cover some other protections that you want to have. So we already talked about the professional inspection. I believe you should never bargain it away, but that's up to you. I think that in most cases you should definitely negotiate, see if the seller will negotiate, or you have to be ready to walk away. If you're not ready to walk away, they won't take you seriously. I know that you're in competition with many others, but here's some things that often do convince a seller. If you are able to come up with a cash offer, if you're able to talk about speed. So sometimes a seller is pressed to sell. Find out more about that. Maybe it's they have to leave and live in another state 2 weeks from now. Well, if you talk about the fact that you're ready, willing, and able to buy, within 2 weeks, that might be the kind of thing that convinces them. So find out the deals of what makes you special. Insurance is your protection. It's mandatory. If you get a mortgage, you have no choice because it's not your house yet. It's owned not by you. It's owned by the mortgage company or by the bank or credit union until it's fully paid. Until then, you got to have insurance on their house until you fully own it. Remember that your insurance covers the house and not the land. So you really are insuring the house and what's in it. You have to schedule items in detail in the house, like furs, jewelry, paintings. If you happen to have a Picasso, you got to have a scheduled item that says you got a Picasso. You got to have those things all listed or else they aren't counted. So insurance is something else to deal with. And then finally, I've talked about a lawyer. A good lawyer is your friend here. And recognize too, you need a real estate lawyer. Don't just go to your brother-in-law who happens to be a divorce lawyer. they won't have the level of knowledge that a real estate lawyer will have, because there's a lot of legal contracts that have to be done right. You want to make sure that you don't lose your money, your deposit or your offer. The purchase and sales is the governing document that really dictates everything that you do. They are the ones that conduct the closing, the final walkthrough, and there's lots of things that they're in charge of. You want them to be looking out for you, not simply the mortgage lender, but you want to make sure that you're getting a good house that's legally yours. Yes, you have to make sure the real estate lawyer does their due diligence here. And one of the many things they're paying for is the line of succession of ownership of this house. It has to go back to when the deed was first made for this house. And the succession of ownership is your, prior owners going back 20, 30 years who owned it, and did they legally transfer it each time, and was it registered each time? So it was sold and registered, then sold and registered, and sold and registered. And today they're trying to sell it again. Do they have the legal right to sell it? It's not uncommon, doesn't happen all the time, that someone could buy a house and not legally own it if the chain of succession was not done. So that would be a legal mess.
There's a question that came in.
Go on.
One of the questions says, if I purchased a home with my wife and we divorced over 30 years ago and she kept the house in her own name,
Yes.
am I considered a first-time home buyer, and what exactly is escrow?
Okay, good questions. Let me answer them. First question is, at least again, I can talk for sure here in Mass, and in most cases that I know of, you're considered a first-time home buyer if you have not owned a house for the last 3 years. So if you're not registered on the deed, then you're considered a new homeowner if it's been more than 3 years since you were on the deed. So that's one thing. Escrow is a process by which monies that you owe, like taxes, are put into an account. So typically when you buy a house and you have the closing costs, part of what's put into escrow is monies that think of it as a special non-interest bearing account, a place to hold money legally that basically will then be used to pay something else. So an example being, you would often have to pay for your first whole year of taxes up front. So if your full taxes for the year was $5,000, $5,000 would be paid by you into an escrow account, of which then your local town can pull from that escrow account to pay for the quarterly taxes that you have to pay. So it depends on your situation, but often your insurance money goes in escrow, your tax money goes in escrow, and certainly between you and the seller, your deposit goes in escrow until it's actually, and you'll get it back if you don't end up buying the house, or you will lose it once if you finally do buy the house, then the seller gets that out of escrow. Hopefully that answers your question. And I'm going to have to come to a closing very soon, so I'm have to with you guys because I have another webinar in a minute. The purchase and sales is key. That's really where everything has to be in writing. As I said before, you have to have everything written there, everything. So that's all I can say for now. I also give you this final walkthrough, and this is your chance to see everything with everything out of it. Don't pass this up either. It's one of the last things you do, and you will find that this is really how you can look through in case there was a huge rug in this floor here, and they, let's just say, had a big burn or a big burn mark or a big, huge, something wrong with the wood. You wouldn't know it when the rug was there or couches or other chairs. But with everything totally bare and open, this is your last chance to say something's wrong here, and you can negotiate at the adjustment at the closing. But you will see that there's all these steps are important. You have to make sure that you take care of all this along the way. Buying a house is a great, great thing to do. But I always say again, do it when you're ready. Never stop asking questions. Work with people you trust, and they will be the ones who will see you through this and make sure it's a good experience for you. I thank you all for joining me, and I wish you all the best. Thanks for your attention today. So goodbye for now.